experts just revised the housing forecast. Let's check it out. If the housing market feels confusing right now, you're not crazy. At the end of last year, experts were expecting 2026 to be the year things finally got easier. Mortgage rates were supposed to come down. Affordability was supposed to improve. Home sales were supposed to rebound. But that is not exactly what happened. Instead, mortgage rates stayed higher than expected. Buyers stayed cautious. And economists are now revising their forecast for the rest of the year. But there is the part most people are missing. A revised forecast does not mean the housing market is in trouble. It means the market is reacting to inflation, uncertainty, and higher borrowing costs. And depending on whether you're buying or selling, that could actually create an opportunity. So in this video, I'm going to break down what changed, what it means for mortgage rates, home sales, new construction, and home prices, and most importantly, what it means for you. Because the people who understand this shift now are going to make much better decisions than the people waiting for the market to suddenly feel perfect. Mortgage rates may stay higher than people wanted, as you can see from this chart. The first big change is mortgage rates. Earlier forecasts were more optimistic. A lot of people expected rates to move back down into the low sixes, maybe even the upper fives. And let's be honest, that is what almost every buyer was hoping for. But now many experts are saying rates may stay closer to the mid-sixes range for the rest of the year. That is not what buyers want to hear. I get it. But it is important to understand why this is happening. Rates have stayed elevated because inflation has been sticky. The economy has remained uncertain, and geopolitical tensions overseas, which we did not anticipate, have added pressure to financial markets. In other words, this is not just a housing market problem. This is a global event problem. It is a broader economic problem that is spilling into housing. And here's the mistake a lot of buyers are making right now. They're waiting for a rate drop that may not happen as quickly as they expect. Now, could rates still come down? Yes. If inflation improves, economic uncertainty fades, or global tensions settle down, rates could move lower. But based on what experts know today, waiting for the perfect rate may not pay off the way some buyers would hope. And that brings us to the bigger question. If rates stay around this level for longer, what happens to home sales? Existing home sales were revised lower. This is where we see the second major forecast change. Experts originally thought existing home sales would be stronger this year. At one point, forecasts were closer to about 4.5 million homes sold. Now, that expectation has been revised close to 4.2 million. That tells us one very important thing. Buyers are still hesitant. And the biggest reason is affordability. When mortgage rates are higher, monthly payments are higher. And when monthly payments are higher, buyers either pause their search, lower their budget, or decide to rent a little longer. This is especially true for first-time buyers. They are not just comparing home prices. They're comparing monthly payments, down payments, insurance, taxes, and the overall cost of living. So yes, the market is moving slower than experts originally expected. But slower does not mean stopped. And this is the part that matters. Even though sales forecasts were revised lower, experts still expect more homes to sell this year than last year in 2025. That means demand has not disappeared. It has not diminished. It's just sitting on the sidelines. There are buyers out there who want to move. They want to purchase. They want more space. They want to stop renting. They want to relocate. They're just waiting for the numbers to make more sense. That is what people mean when they talk about pent-up demand. And if mortgage rates eventually improve, even just slightly, many of those buyers could come back into the market. If you are a buyer, here is why that matters to you. If you can afford a home at today's rates, you may have less competition today than you will later. Because if rates drop and a wave of buyers comes back, you may not be the only one looking anymore. That could mean more bidding, more pressure, and fewer options. So the question is not just, should I wait for lower rate? The better question is, will lower rates bring more competition with them? And in many markets, the answer may be yes. New home sales slowed, but buyers may have more leverage. Now let's talk about new construction because this is one of the most overlooked parts of the market right now. Builders also expected a stronger year. Earlier forecasts had new home sales potentially moving above 700,000. Now, expectations have been pulled back slightly. Again, mortgage rates are a major reason. When rates are higher, buyers are more cautious, and that affects builders too. But here is where this gets interesting. A slower new construction market can actually create opportunities for buyers. Why? Because builders are in the business of selling homes. They do not want completed homes sitting unsold. They do not want inventory building up. And in markets where there is more new construction, builders may be more willing to offer incentives. That could mean mortgage rate buy downs, closing cost assistance, design upgrades, price adjustments, or more flexibility during negotiation. And this is something buyers should pay close attention to. I actually did a video about why it's important for you to be represented by a real estate agent when buying new construction. You might want to check that out. Because while resale seller may not be willing or able to help much with affordability, a builder sometimes has more tools available. They may be able to structure a deal in a way that makes the monthly payment more manageable. I know that we just went through one with one of our clients buying a new construction. So if you're buying in an area with a lot of new construction, this could be one of the brighter spots in the marketplace. The market may feel frustrating, but frustration often creates a leverage. And right now, builder motivation could be one of the biggest leverage points buyers have. But there is one part of the forecast that did not change much, and this one is extremely important. Home prices are still expected to rise, even though mortgage rates are higher. Even though home sales were revised lower, and you can see that on the chart, even though buyers are more cautious, experts are still expecting home prices to rise nationally this year. That surprises a lot of people, I know, because many buyers assume that if sales slow down, prices should fall. But housing does not work that simply. Prices are driven by supply and demand. And while buyer demand has softened, this number of homes for sale is still limited in many areas. So even though there are fewer buyers actively moving, there also are not enough homes available in many markets to cause a major national price drop. That imbalance is helping support prices. This does not mean every market is the same. It certainly is not. Some local markets are cooling, some are seeing more inventory, Some sellers are having to negotiate more. Some homes are sitting longer. But nationally, experts are still projecting price growth, not a crash. Hear me again, not a crash. And that matters to both buyers and sellers. For sellers, it means the market may be slower, but home values are not expected to collapse nationally. For buyers, it means waiting for a major price drop may be risky if prices continue rising. Because if you wait a year hoping prices fall, but prices rise and rates do not improve enough, the homes you want could become even more expensive. That is why trying to perfectly time the market is nearly impossible. A lower mortgage rate does not automatically mean a better deal if the home price is higher or competition is stronger. The real goal is not to buy when the headlines feel good. The real goal is to buy when the numbers work for your life and your lifestyle. So what does this mean for buyers and sellers? What should you actually do with all of this information? So if you are a buyer, here is the message. Do not wait for the market to become perfect. Because perfect markets usually don't last. They usually attract a lot more competition, and that could work against you. Instead, look at what you can afford. Look at your budget, your monthly payment, your loan options, your negotiation strategy, your local market, and whether the home fits your long-term plans. And when I say long-term, it could be a starter home for you, and you just need to hold it for 5 years. If you can afford a home today and you find the right one, waiting just because you hope rates fall may not be the best move. But if the numbers do not work, don't force it either. This is why it's so important for you to be working with a team of competent professionals to support you, your lender and your real estate agent. This is not about rushing. It's about being prepared. Now, for sellers, the message is different. You may still be in the market where prices are holding up, but you cannot price your home like it is 2021 or 2022. Buyers are more payment sensitive now. They are comparing every option. That's why it feels like buyers are much more cautious. And if your home is overpriced, it may sit. So for sellers, the sellers who win in this market are the ones who price strategically, prepare the home well, and understand that buyers may need more motivation than they did a few years ago. This market is not frozen by any means. It is just more selective. And selective markets reward people who are well informed. So here is the bottom line. The housing market has not rebounded as quickly as experts originally expected. Mortgage rates stayed higher. Affordability remained challenging. Home sales forecasts were revised lower. New home sales slowed. But home prices are still expected to rise nationally, and demand has not disappeared. It is just waiting. It is important for you to note that this forecast revision should not be viewed as a sign of disaster. It is better understood as a temporary reaction to higher inflation, economic uncertainty, and global tensions. When those pressures ease, momentum could return. And when it does, the buyers and sellers who prepared early will be in a much stronger position than the ones who waited for the headlines to tell them what to do. So if you're trying to decide whether to buy or sell this year, don't make your decision based on a national headlines alone. Look at your local market, look at your personal numbers, and make the move when it makes sense for you. Because the housing market may be confusing right now, but confusion is exactly where opportunity shows up for the people paying attention. And if you're wondering what this means for your specific situation, that is where a local strategy matters, because national forecasts can tell us the direction of the market, but they cannot tell you what your home is worth, how much competition you will face, or whether buying now makes sense based on your monthly payment. So if you want help looking at the numbers for your situation, reach out and I can walk you through what is happening in our local market right now.
Before you decide to wait, buy, sell, or renew your lease, get the numbers first. The market may not be perfect, but your strategy can be. Reach out and I'll help you understand what today's market actually means for you and what might be the next logical steps that would make sense for you and your family. Thanks for watching.